You saved for 10 years for a down payment. You still can't buy a house. Why? Because you're not competing with your neighbors. You're competing with hedge funds managing billions of dollars. I spent 18 years in banking handling mortgages. I watched the entire game change. Today, I'm telling you the secrets banks and investment firms won't admit. This video might change how you think about mortgages forever.
After the 2008 financial crisis, large investment funds discovered something profitable. Buying houses and collecting rent beats the stock market. Blackstone, Invitation Homes, these institutions started buying entire neighborhoods at once. In just 10 years, from 2012 to 2022, the percentage of single-family homes owned by institutions in America went from 2% to 8%. In some hot markets, it's 20%. Do you know what this means? When the news says house prices are rising, the real story is investors are buying. Who are you paying rent to? Not the landlord. The shareholders on Wall Street. This is why your salary will never keep up with house prices. You're competing against a system that's already rigged. But this is just the beginning. Inside banks, there are 3 more secrets you don't know about. Secrets that explain why you got denied for a mortgage, why your friend got approved for a better rate, and why the system is designed to keep you renting. Let me show you how it really works. Secret number 1, the 2-track approval system. When you apply for a mortgage, the bank asks proof of income, credit report, guarantor, down payment at least 20%. When an investment firm applies, the bank has a commercial finance department. They don't look at payslips. They only look at cash flow. Their interest rate is lower. Their down payment, only 10%. Why? Because they're buying 10 houses at once. The bank treats them like VIPs. You're just another customer. Secret number 2, the owner-occupied loophole. The rule says you get a low rate only if you buy to live there yourself. The reality? Investment firms create shell companies. Each house is registered under a different person's name. It looks like individual owner occupancy on paper. Banks look the other way because these are big clients. You want an investment property mortgage? The interest rate goes up 1.5%. You need 40% down. Want the owner-occupied discount? Sorry, the bank knows your real intention. Secret number 3, the appraiser's flexibility. When you buy a house, the appraisal always comes back just short. You have to pay more cash to make up the difference. When institutions buy, the appraisal comes back exactly right for their financing needs. Why? Because the appraiser works with the bank. The bank tells them, this is a major client. Make it work. That's the game. You don't see it, but it's always happening. Let me give you real examples. This is happening everywhere. In Taiwan, from 2020 to 2023, developers started the lease management model. On the surface, we'll manage your rental property. The truth, developers create asset management companies and convert unsold inventory into long-term holdings. Banks cooperate by offering construction financing converted to long-term holding packages. A regular person wants to buy a unit in the same building? Sorry, the legal entity already bought it. Here's another example. An engineer earns $1.5 million a year. He saved his down payment. He applies for an $8 million mortgage. The bank says, get a guarantor. The same month, a developer-affiliated company borrows $500 million to buy 10 commercial properties. Their interest rate? 0.3% lower than the engineer's. Why? The bank's lending capacity is limited. Big clients get priority. You wait in line for approval, the bank has already decided who they want. This is reality. And here's the thing. If a bank operated like this in the private sector, they'd be arrested for illegal fundraising. But the government system works exactly this way. The difference? The government can print money. They can raise taxes. Everyone else pays the bill. So what do? First, know your real competition. When looking at a house, ask the agent, how many units in this building are owned by corporate entities? Check the property registry. Is the buyer an individual or a company? If it's mostly companies, this is investor territory. Avoid it. Second, use competition between banks. Don't just ask one bank. Compare at least 3. Tell each bank, Bank A offered me 1.8% interest. What can you offer? When banks compete for you, you have negotiating power. Third, timing matters more than down payment size. Don't wait until you've saved enough. House prices rise faster than you save. Banks want clients with steady income and reasonable debt, not zero debt. Having a mortgage history proves you can repay. Fourth, don't rely on home equity to build wealth. If the system is rigged, don't compete against it. Buy a modest starter home. Invest the extra money in assets that fight inflation. Index ETFs, REITs. That's a smarter game. Have you been denied a mortgage, told you need a guarantor, given a rate higher than you expected? Leave a comment. Tell me your situation. I'll message you specific strategies based on 18 years of banking experience. Subscribe to Monivo. Next week, I expose more secrets the banks won't tell you.